Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Crowdstrike stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Crowdstrike is a cybersecurity company. It provides endpoint security, threat intelligence, and cyber attack response services. The company is headquartered in Sunnyvale, California. It was founded in 2011. The ticker trades on the NASDAQ. Let's get started with the model. This is a large cap company, 44 billion market cap. They're trading at $190 a share, and they have 232 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. So their free cash flow looks really good. It jumps from 12 million way up to almost 300 million. Then jumps up again to 441 million, then 543 million in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. And it looks like they have a lot of non-cash expenses because they have negative net income each year. Revenue is a sales for the company, and that goes up from $500 million to 1.8 billion, so that looks really good. Let's look at the capital structure. They have 1.2 billion of equity, 770 million of debt. So they're 61% equity, 39% debt. But they have enough cash on their balance sheet to pay off all their debt and still have 1.5 billion of cash left over. I use the middle whack on Finbox, 7%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 40 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $34 billion. We divide that by 232 million shares, and we get a calculated stock price of 146. They're trading at 191, so they're trading at a 31% premium. It's a sell according to the model. Their revenue forecast for 2025 is 4.1 billion. For 2024, it's 3.1 billion. For 2023, it's 2.2 billion. And for 2022, it's 1.6 billion, which is lower than the trailing 12 months, so it seems like a pretty conservative estimate. They convert 33% of their revenue into free cash flow. I used 2021, 2022 in the trailing 12 months. I excluded 2020 because it looks like that's the first time they started generating free cash flow, so it seemed like an outlier. So I multiplied their future revenue estimates by 33%. That's how I got their future free cash flows. I did invest in this stock about a year ago, and then after 6 months I was up 50%. And then the stock crashed. I think I sold at a loss of around 20%. There are 147 companies in their industry. These are the top 20. Crowdstrike ranks 7th in market cap at 44 billion. The average is 21 billion. They spend a little less than average in CapEx. They do have a better debt to equity ratio than the average company. They're 0.6. Average is 1.2. That means for every dollar of equity, they only have 60 cents of debt. Their free cash flow is a little lower than average. VMware has a similar market cap, and it has 6 times the free cash flow. The company has been growing a lot the past few years, but their price multiples are worse than average. Their price to book, price to free cash flow, and price to sales are worse than average. And we can't look at their PE since they have negative net income. They only generate 1.8 billion of revenue. Square has 16 billion, and they're smaller in terms of market cap. The reason this company's stock price has gone up so much is because look at their 5-year revenue growth rate, 94%. They still have a negative ROA and ROE since they have negative net income. So to summarize, I have them trading at a 31% premium, and this could be a good time to buy the stock because it was a lot higher a year ago. It's come down a lot. And the company's just hitting their stride. Look how well their numbers are. Free cash flow from 12 million to 540 million. Revenue from 500 million to 1.8 billion. So I ranked their free cash flow 8 out of 10, their revenue 8 out of 10, and their ratio is 3 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.